On today's hot sheet, I'm discussing the NAHB Housing Market Index, so builder sentiment, housing starts, mortgage applications, and weekly unemployment. Today is Wednesday, June 18, 2025. I am Byron Lazine, and the hot sheet starts now. Live from Connecticut, joining all of you wherever you may be. Let me know in the live chat which market you are tuning in from. Nate from Jacksonville, Fidel coming in from Denver, Colorado. I was just in Colorado Springs. Kim in Charlotte. Good to see all of you. Trisha from Montana. All right. We've got builder sentiment right now, and we've got other builder data that we're going to go through. Housing starts and permits and completions. We have that data in, as well as mortgage applications. It's a packed up day here on the hot sheet, all coming into tomorrow, where this afternoon the Fed's going to make their decision on where they're at on rates. We've been talking about it. Seems like we're pretty much priced in to, with no movement, but I'm seeing some market pricing here this morning even that suggests they're gearing up for what Jerome Powell might say. So he's going to have his presser this afternoon. Of course, we're going to extract all that data. That's what we do here at BAM. Every mention of housing, we're going to pull for you, and we'll break it down. We are doing a show tomorrow morning, and make sure you're subscribed here. Subscribe to the channel, hit the notification bell here on @NowBAM YouTube so you don't miss it. Tomorrow we will be live going through all the housing mentions and the implications on rates. I'll have a little bit more on that at the end of the show. All right, NAHB, National Association of Home Builders. This is in conjunction there with Wells Fargo Housing Market Index. They come out with their builder sentiment. Okay, so we've got builder sentiment. Then we're going to get into the housing starts and completions. Builder sentiment right now, according to NAHB data, is at the third lowest reading since, all the way back in 2012. 2012 was what I would consider the true bottoming of the real estate market after the GFC. You definitely had a down market in 08, 09 for sure. But you kind of had a double bottoming as the economy was really struggling throughout those initial years. I mean, if you remember, if you were in real estate, you remember how many agents got insurance jobs, how many agents were just exiting out of the business. It was a scary place to be. Some of the strongest stuck it out, but a lot didn't. It was a pretty toxic, this is the time frame I started. It was a pretty toxic time to be saying, I wanted to be an agent. Agents themselves were pushing people, don't do it. Don't do it. It's really bad out here. 2012 was the bottoming of the market. So third lowest sentiment for builders since that time frame of 2012. That's really low. That it's not feeling good. Builders don't feel great. A lot of uncertainty due to varying factors. And right now, coming in at their third lowest sentiment since 2012, buyers are moving to the sidelines. We're going to look at mortgage applications here before the end of the show for the week. And when we talk about this, NAHB report talks about buyers moving to the sidelines. They're really talking about this 3-year real estate recession that we've been in with the elevated mortgage rates and now tariff economic uncertainty. We haven't seen, existing home sales pop, from these low numbers that we've experienced the last year, 2 years. 37% of builders right now are reporting cutting prices in June. All right, builders get what the summer brings. Some sellers don't. I'm talking agents where they're talking existing home sellers, and they're looking for 22, 21 pricing, not pricing because pricing's higher, but the demand. They're pricing the property as if they're going to have the demand of 21, the demand of spring 22. Okay, the value of your home is based on 4 million sales in a 330 plus million population country. The value of your home is based on yesterday's demand. Your home isn't valuable like it was in those high demand markets. It's not as valuable. It's supply and demand. Okay. Well, no, home prices have gone up, Byron, in the last couple of years. Yes, they have. But we see what happens in higher inventory markets. Pressure on price moves down. Just because you have your home listed doesn't mean you're going to be a seller this year. You know, listings and closings are two different things. There's a lot of steps that have to take place between the two. And there's a lot of sellers right now that are listing but aren't sellers. Okay. I saw a TikTok the other day from an agent in Florida. I wouldn't advise doing this, but talking about how there's a lot of sellers who are way overpriced, and we as agents, we're not taking those listings. What I wouldn't do is say, hey, we invest $500 in every listing. Well, I wouldn't be too proud about that number. Okay. If all you're investing is $500 in a listing, you're not calculating. I mean, you're talking about photography. You're not talking about time. You're not talking about strategy. You're not valuing anything else you do. That's the part I had a little bit of a problem with, saying, hey, we're investing $500 in every listing. So that's why we're turning them down, because if we take 5 listings that don't sell, that's $2,500. Like, no seller, when you're talking about their $700,000 house, thinks $2,500 over spread across 5 listings is a lot of money. You're running a business. Okay. If $2,500 across 5 listings is a lot of money to you, you better get partnered with somebody who has an expense, who believes in showcasing value, can spend money, get on a team, whatever the case may be. If $2,500 across 5 listings is scary to you as an agent, you got to start considering other options. Your solo business isn't working if that's the case, if that's what's going through your mind, if a $500 decision is what's holding you back. Okay, maybe there's not alignment with the seller on price, on strategy, on those different things. If the $500 is something that scares you off, you're in the wrong bit. This is a business here. $500 decisions should not be big decisions. Okay, 34% of builders right now understand the decision of the moment. 34% of builders are like, we're cutting right now. Okay, 37%, I'm sorry. 37% are cutting. Why? This is the feeling. Okay. There's a 32 on the scale of sentiment. Third lowest since 2012, and the lowest we've seen in the last couple of years on sentiment. Builders don't want to wait around for all of a sudden more buyers to turn their head up into the market in the summer. They get the moment. The moment right now in the summer is we're in a declining valuable of demand of what's valuable market. Just because home values are high or at peak levels or record levels in some markets doesn't mean the property's more valuable. Value is driven by demand, and builders are tracking, hey, how much foot traffic am I getting? What are sales conditions? Sales conditions fell 2 points to 35. Expectations in the next 6 months dropped 2 points again to 40. The traffic that they're generating listen, nothing's easier to generate traffic than a house that has an open house 24/7. Model homes. I don't got to schedule through an agent. I don't got to get somebody to get their dog out of the house. I don't got to worry about when the seller's having a picnic. I can just walk in. It's a model home. Traffic of prospective buyers posted a 2-point decline to 21. This is on a scale of 100. Okay, so 37% of builders are cutting price to generate activity, to generate interest. If I'm an existing home seller, I got to acknowledge what builders are doing. They're reacting to the market. The market is the market. Just because your home might be you might theoretically have this equity built up based on yesterday's market, yesterday's values. If you place your home on the market, you'll learn how valuable it is to the market. How many buyers are really considering making an offer on a property at that level? Okay. Right now, builder sentiment down, third lowest reading since 2012. All the numbers are down. They're cutting prices. Ivy Zellman says, hey, you're talking to a seller. You should be encouraging them to build incentives into the price. Okay. If you're going to come out at a certain price and you're not incentivizing, there's a lot of different ways to incentivize. If you're not incentivizing the buyer community as a seller, going to be one of those ones that rolls over to next year. All right. What's backing up this data? Let's take a look. Let's take a look at some hard data here from the U.S. Census Bureau and the U.S. Department of Housing, just released today. New construction. Permits coming at 1.393 million. Okay. These are seasonally adjusted numbers. So just under 1.4 on building permits, just over 1.25 on housing starts. And both of those numbers, permits and starts. Okay, those are both indications of, in hard data, not just the sentiment that we just went over, but these are both indications of how builders feel about the future of the market for them, for their product, for new inventory. Both of these numbers are well below expectations. Housing starts were expected to be up over 1.35. Well off, right around 135. So housing starts were well off of expectations, meaning some builders are like, we're not starting. And here's the other thing that's interesting about permits. Okay, let's start with permits. Permits came in 13% of them on multifamily. It's the highest level in quite some time. So why is multifamily going up in a high interest rate environment and permits on single family going down? Well, builders are saying, if we believe there's going to be less buyers for homes, well, what do they got to do? They got to go rent. So even in a high interest rate environment, they're going and building now more for the first time in some time here, more multifamily than single family. Okay, completions up, permits and starts down to lowest level we've seen since really the beginning of 2020. So starts come way down off of expectations. Completions being up a tick isn't surprising. Hey, get this stuff done. We're already in the middle of it. We got to finish it. 2% building permits is 2% below the April revised level of 1.422, 1% below May's 24 rate. And single family authorizations in May were at a rate of 898,000 out of the almost 1.4 million. So 2.7% below April's figure. So building permits on single family moving down. And listen, they always talk about 3 to 7 million homes short to meet demand. Builders get what I get. The demand is only there at a certain price point. Okay. At a certain price point and in certain locations right now. If we were truly 3 to 7 million homes short to meet demand, they wouldn't be building only 898,000 this year. Okay. We're just not. All they want to build in is the Sun Belt. They don't want to build in the Northeast. And that's where they've got demand right now. That's where they have a lack of supply, but you can't build anything affordable. So why even bother? And you got winners that interrupt. Authorizations of units in buildings with 5 or more were at 444,000 in May. So that number is going up. Housing starts Again, 125 million, well below expectations. It's 9.8% below April's estimate of 1.392. Look at that, 10% below April. It's been 1 month. 4.6% below May 2024. So all those numbers are coming in lower than expectations, lower than last month, lower than last year on housing starts. Single family starts in May were at a rate of 924,000. That's 0.4% above April of 920. So kind of flat there. And then multi was at 316,000. Housing completions, 5.4% above April, 2.2% below last year over year. Okay. There you go on builders. Here we are with total starts versus single family. You can see that gap is starting to close in a little bit from where it was previously. All right. Mortgage applications. What does the future of demand look like? If builders are pretty hawkish on the future of demand, what did mortgage applications tell us? The headline is mortgage applications moved down from last week. I expect it this time of year, regardless of rates. It's just a seasonal decline, 2.6% from 1 week earlier. That's headline. That includes refinances. Okay. The refinance index decreased 2% from the previous week. That being said, 25% higher than the same week a year ago. The seasonally adjusted purchase index was 3% down from the week earlier. But here's the big one now, 21 straight weeks. It's 14% higher than the same week a year ago. So 21 straight where we've got year over year increases on mortgage demand, okay, for the future. So if rates go down, sentiment for builders could change quickly. There's just too much uncertainty for them to make a move. It kind of sounds like Jerome Powell and what he's going to say this afternoon. Too much uncertainty to make a move. But if we do see rates get to 6%, some of these numbers can change in a hurry because mortgage applications show us that, hey, future looks bright. Mortgage rates decreased last week. By the way, the decrease that we've seen over the last week on mortgage rates, lowest since April. 30-year fixed decrease to 6.84, lowest level since April. Mortgage Banker Association Vice President and Chief Economist Joel Kahn said, even with lower mortgage rates, applications declined over the week as ongoing economics uncertainty weighed the potential home buyer purchase decisions, blah, blah, blah. All right. Here's a look going back, still low levels that we hit in 12, 13, 11, 12, 15, and going back to 95. Lowest level since 95 on mortgage purchase application index, both on the purchase index and the 4-week moving average, but recovering now with 21 straight weeks. Can't have a recovery without, a trend that we're building. 21 straight week. I mean, that's more than a trend. It's starting to become a habit here where we have buyers saying, yeah, I want to get in the game. I want to get approved. I want to apply. And obviously waiting for the right home, the right opportunity, and potentially even the right rate as they move forward through the summer and through the second half of the year. All right, if you want to watch what the market might be reacting to today and what Jerome Powell might be saying this afternoon, we got to watch jobs. Unemployment claims come in for this past week at 245,000. That's a decrease. So the previous week, last week was 248 and then revised up to 250. That 250 is that golden number. That was moved up by 2,000 to 250. So this is a decrease of 5,000 from the previous week's revised level. The 4-week moving average now is 245,500. It's another increase of near 5,000 from the previous week's revised average. It's the highest level for this average since August 19th, 2023, when it was at 246. Okay. So we now have a real thing to talk about with unemployment. We now have 3 weeks in a row where this number is getting close to 250. You get above 250,000 on the 4-week moving average, and the Fed has to acknowledge it. We're going to see what happens this afternoon with Jerome Powell. They have 2 mandates: inflation down to 2%. We're basically there. They don't want to acknowledge that for whatever reason because of, their reason is tariff uncertainty. But we're now seeing unemployment tick up. I get it, 4.2% on unemployment hard data. This weekly data, though, shows us that we're seeing some signs that the labor market is softening. Okay. And so, what's Jerome Powell going to say about that? They have a dual mandate. One of those is obviously to keep employment at a maximum level. Already today, just kind of based on where we're at with this news, we're seeing the 10-year move down a little bit, 4.365. Okay. This is a sharp move down in the last 24 hours. So is the market saying, hey, we expect Jerome Powell to, either mention, jobs, or potentially is the market preparing for Jerome Powell to come out and say, hey, we are going to cut this year. Okay. It's interesting to see what the market's doing this morning. Fed is obviously likely to keep rates the same, but give a forecast that will move the markets. What direction will the markets move is going to really to be dependent on, kind of what Powell says. But the early indications are the market's going to like what Powell says. Dow's up, S&P's up, NASDAQ's up, 10 years down. Obviously a lot going on. What are they going to say about the uncertainty in tariffs? What are they going to say about the uncertainty in the Middle East? All that plays an impact. Right now, early signs are the market is not concerned with what Jerome Powell is going to say this afternoon. In fact, the market may be reacting positively, and we might see a move down on the 30-year today. It's all going to depend on the press conference this afternoon, but 6.88 is where we ended yesterday. Okay. A couple quick things here. BAM BBQ, free virtual event, third mega virtual event of the year for BAM's July 16th. Ryan Serhant, Leo Perea, Scott Harris. Scott's the experience.com CEO, Leo's EXP CEO, and Ryan Serhant, Serhant Technologies CEO. Myself and Eric will be moderating the event. You can go to bambbq.live to get your free spot there. The only in-person virtual event of the year is going to be in Scottsdale. It's September 24th, BAM Camp. Go to bamcamp.live. Go to bamcamp.live. Check out the entire lineup and some of the speakers. This is going to be an event you do not want to miss. bamcamp.live. You're going to be in Arizona on the West Coast, September 24th. Get your tickets now. VIP, I think we sold some more tickets yesterday. So we're like single-digit VIP tickets left, less than half of mid-tier pricing, and we still have some general admission. So grab your tickets there. BAM Camp, September 24th. bamcamp.live to grab that. All right. Members, you got Chris Benjamin later today over in school for BAMX members, school.com/BAMX to get your trial over there if you want to check that out. And we'll see what Jerome Powell says today. I'll be with you guys tomorrow to break it all down. We'll see what he says. And this will be the only place that extracts all the housing data and delivers it to you right here on the hot sheet tomorrow, 9:30 Eastern, 6:30 in the West. Until then, of course, toodaloo.